Right friends, welcome back to Learning Space. This is continuation of the revision series, 22nd module and policies and programs. This is the first module of policies and programs, and two clarifications I would like to give. Out of these 80 modules, only 25 will be available in YouTube and all 80 will be available with Learning Space Digital. That is the first point I would like to convey. And the second point is, some students are asking about brainstorming from the editorials, and in fact important aspects from the editorial discussions are all being incorporated in these revision modules, right? So today's module is the start of the special series on policies and programs, and policies and programs from examination perspective are very important. And in this lecture we have taken the recent policies and programs, and this series of policies and programs will continue to include the policies of last year also, right? So now from the perspective of examination, the recent policies are very important, and as far as recent policies are concerned, students are advised to spend at least 4 to 5 minutes on various aspects of policies and programs, because a critical question may be asked. So in this module I have taken important aspects of the Pradhan Mantri Shram Yogi Maandhan, and the next one is 10% quota, then PM Kisan, and what are the changes made to GST in the housing in recent times, what are the changes made to income tax. So all these things I have incorporated in the policies and programs first module, right friends? Let us spend at least 3 to 4 minutes on each policy and program, and I would like to spend another 30 minutes on these 4-5 issues. And I would like to be threadbare as far as 10% quota is concerned. That is most important. And the first one, Pradhan Mantri Shram Yogi Maandhan Yojana, and here a critical question may be asked. Please don't forget, it is central sector scheme, very important. Central sector scheme administered by the Ministry of Labour and Employment. Have a glance at various aspects. It is exclusively for unorganized sector workers only, very important. Pradhan Mantri Shram Yogi Maandhan is exclusively for unorganized sector, and please don't forget, these are the type of workers expected, and some critical question may be asked whether it is applicable for agricultural laborers or not. Here please have a glance at it. It includes landless laborers also. So therefore agricultural laborers are also included in this, because as per the document landless laborers are also included. So basically please don't forget, it is meant for unorganized sector workers only. And here monthly income must be rupees 15,000 or less. Entry age is 18 to 40 years. And one important aspect is, they should not be covered through any of this national pension system or ESIC or employees provident fund organization. So any of these, they should not be covered, and at the same time they should not be income tax payers. So these are excluded straight away. So here monthly income is rupees 15,000 or less, and this is central sector scheme, very important, administered by the Ministry of Labour and Employment. Have a glance at it. It is voluntary, that is also very important. It is not mandatory, it is voluntary. And contributory pension scheme, these words very important. So this Pradhan Mantri Shram Yogi Maandhan Yojana is a contributory pension scheme. So you are contributing, 50% is contributed by the center. So therefore 50-50 contribution, 50 contribution by the citizen, 50 contribution by the center. Please do not forget. And each subscriber will receive minimum assured pension of rupees 3,000 per month after attaining the age of 60 years. And another important aspect, if the subscriber dies during the receipt of the pension, that means suppose the subscriber attained 64 years, he is receiving pension, but he died suddenly, then what happens? Then his spouse, she will get 50% of the pension received by the person as family pension, right? So for the spouse it is applicable. That means if wife dies, it is applicable for husband. If husband dies, it is applicable for wife during the receipt of the pension. Please don't forget. And this 50% is known as family pension, because when you are looking at any new program, please have clarity about all the aspects. Next important aspect, it will be through auto debit facility from the bank account. And the next one is anyone can join in the age group of 18 to 40 years. If anyone is joining at 18 years, per month they have to pay 55 rupees, and central government will contribute another 55 rupees every month. And if he joins at the age of 29, he has to contribute every month rupees 100 till he attains the age of 60. Very, very important. So whoever joins at the age of 18, they have to contribute rupees 55 per month up to 60 years, and once they attain 60 years of age, they will get rupees 3000 monthly pension. And here, when they are subscribing with 55 rupees per month, central government will contribute another 55. So therefore, please don't forget, this is a contributory pension scheme, voluntary contributory pension, 50% contributed by the central government. Very, very important. And if somebody is joining at the age of 40, it is 200 by the person and 200 by the center, and it is voluntary contributory pension scheme on 50-50 basis. And please don't forget, the subscriber must have JOM Trinity. JOM Trinity means this mobile phone, savings bank account and Aadhaar number. And another important aspect, it is on self-certification basis. That is, self-certification is enough, and the enrollment is carried out by all the common service centers. What are these common service centers? Common service centers are in the rural and remote areas, and here village level entrepreneurs man these centers. They are basically to disseminate digital services from the government as well as from the private sector. So please don't forget, common service centers are intended for G2C as well as B2C. Right? So this is all about Pradhan Mantri Shram Yogi Maandhan Yojana. And another important aspect is here, it is the central sector scheme, I have already told you, and it is implemented through Life Insurance Corporation of India and CSC E-Governance Services Limited, this Common Service Centers E-Governance Services Limited and LIC of India. And please don't forget, Life Insurance Corporation of India will be the pension fund manager, and LIC is responsible for the pension payout. Right friends, these are the important aspects of Pradhan Mantri Shram Yogi Maandhan Yojana. Right, whoever is joining within the age group of 18 to 40 years, they have to contribute every month till they attain 60 years of age, and here center will give matching contribution. Right, so let us leave this discussion here. Why I have taken all these points is, you should have clarity about all the aspects when you are looking at any new scheme. Let us look at equally important 10% reservation for economically weaker sections, and government already implemented it from February 1, 2019, and Ministry of Personnel, Public Grievances and Pensions, it already issued the circular implementing it from February 1. It also said Ministry of Human Resource Development will issue with regard to the implementation in the educational institutions. Right friends, this 10% quota that is already made applicable for February 1. And in this context, let me spend around 7-8 minutes on all important aspects. Whatever we have discussed in the editorial discussion for around 3 lectures, or you can say we had 3 lectures on this in the editorial discussion, and I clubbed all of them. I have taken important points. From your preliminary perspective, you need not go through the editorial once again. So we are making these modules specific to prelims, taking all the gist and all the relevant aspects from editorials, PIB as well as why and how. Right friends, let us go back to the history of the reservations to the backward classes and what is the origin of Indira Sahni case. Right friends, in 1980, second backward classes committee headed by BP Mandal that gave its report. We are going back to 1980, and it recommended 27% reservation for OBCs. And what the government has done is, in 1990, government issued office memorandum providing 27% vacancies for socially and educationally backward classes to be filled by the direct recruitment. In 1991, Another office memorandum was issued for reservation of 10% for other economically backward sections. So therefore, the reservation to economically backward sections goes back to 1991. In 1991, office memorandum was issued indicating reservation of 10%. Subsequently, it went to the Supreme Court, and 9-judge bench of the Supreme Court, popularly known as Indira Sahni case, and here in the 6-3 majority verdict that upheld 27% reservation for the backward classes, or you can say OBCs, and it struck down 10% quota based on economic criteria. Right, let us look at Indira Sahni case. First and the foremost is 9-judge constitutional bench capped the reservation at 50%. That is the first important aspect. And the second important aspect is here it talked about adequate representation but not proportionate representation. Very, very important. It said you have to look at adequate representation but not proportionate representation. Third important aspect is if at all you want to cross 50%, that is to be under extraordinary situations. Very important. That is to be in extraordinary situations. Next important aspect is backward class cannot be determined only and exclusively with reference to economic criterion. So therefore, economic criterion alone cannot become the basis for the reservations. These are important aspects of Indira Sahni judgment, right? And it may be a consideration along with, in addition to social backwardness. That means economic backwardness alone cannot be criteria for reservations. 50% limit, you cannot cross that. And it talked about adequate representation but not proportionate representation. Right, friends? It also wanted the creamy layer concept to eliminate advanced sections of backward classes. That's why in the reservations to backward classes, you hear about creamy layer concept. Right? Another important aspect is the Constitution does not define the term backward classes. Right, friends? Having learned about Indira Sahni case, and here prior to this 103rd Amendment, very important, prior to the 103rd Amendment Act, the Constitution talked about only social backwardness, educational backwardness. Very important. Prior to this 10% quota constitutional amendment, the Constitution talked about only social backwardness and educational backwardness. But this included economic backwardness. This is the important change. Friends, 103rd Constitutional Amendment Act, that included economic backwardness. Most important point from your preliminary perspective, right? And another important aspect is in 2010, there was some report by Major General Sinho, and he said 18.2% of general category came under below poverty line. Right, this may not be that important, but please don't forget there was one Sinho committee, please do not forget. And what the government has done now, government through the 103rd Constitutional Amendment Act that provided 10% reservation in government jobs and educational institutions for the economically backwards in the unreserved categories. Very important. This 10% quota is for the economically backward. We have already seen previously only Constitution permits social backwardness, educational backwardness, but with 103rd Amendment, economic backwardness is also included. And now the Constitution 103rd Amendment Act that gives reservation based on economic backwardness for the unreserved category. For that, what it has done? It has done, or you can say, it amended Articles 15 and 16. Accordingly, clauses were added, right? And this is over and above the 50% cap. And what the government said? Government said 50% ceiling applies to SCs, STs and OBCs. The government also said that the new provision separately deals with this economically weaker sections. and this is what the government viewpoint, and students should have clarity about how the amendment is done. And please don't forget, this amendment is basically amendment to the fundamental rights, amendments under fundamental rights under part 3 of the constitution, or you can say when these fundamental rights are amended, states ratification is not required. Very important. So friends, in this 103rd amendment, states ratification was not required, and only with this special majority, that means it is to be passed in each house by absolute majority, that means over 50% of the total membership, and a 2/3 majority of members present and voting. That's how it was passed, right? This is more than enough. And what are the clauses incorporated? Very, very important. Clause 6 to Article 15 and Clause 6 to Article 16. So friends, please don't forget, Clause 6 to Article 15, Clause 6 to Article 16 are incorporated. And please don't forget, very, very important, what is Clause 6 to Article 15? It is allowing the government to give reservation for the economically weaker sections in higher educational institutions. So friends, this Clause 6 to Article 15 that talks about 10% reservation for the economically weaker sections in higher educational institutions, and most important, as per this clause, it is applicable to private institutions also. Sometimes a critical question may be asked on this, how the 103rd constitutional amendment was done, and at the same time a critical question may be asked with regard to this Clause 6 to Article 15, and this not only gives 10% reservation to the economically weaker sections in the government higher educational institutions, but also in the private institutions, whether they are aided or not by the state, most important. However, minority educational institutions are exempted. So friends, these are all we are talking about, the reservation in the educational institutions. Let us look at this Clause 6 to Article 16. This provides with regard to initial appointment in government services. So friends, this is for jobs, this is for educational institutions reservation, right? And here for the reservations in the educational institutions, most important aspect is private educational institutions are also added, whether they are aided or not by the state. Minority institutions are exempted. So Clause 6 to Article 15, this is with regard to educational institutions reservation of 10%, and this talks about the initial appointment in the government services. Having learnt all these things, look at this slide. Why this assumed significance is, we have already seen in the Indira Sahni case, reservations should not exceed 50%. That means exceeding 50%, it violates the equality law, that is Article 14. So therefore, it violates basic structure of the constitution as per the Indira Sahni case, please don't forget. And now some people said, why can't we include them in the 9th schedule? Right? So here one important aspect is Tamil Nadu has got 69% of the reservations and they are protected from judicial review by the 9th schedule. But the Supreme Court in 2007 said laws that violate the basic structure would be open to the judicial review even though they are added in the 9th schedule after 1973. That means subsequent to the Keshwananda Bharati case, if some law is included in the 9th schedule, it is still open to judicial review. So therefore, if the present law, or you can say if the present constitutional amendment bringing 10% quota to the poor, if it is included in the 9th schedule, then also it will be open for judicial review. And please don't forget, yet present, the matter is with the Supreme Court. So please look into this. This talks about the court, already it is into the court. The slide was of that time, so therefore it says there is every possibility that the proposed 10% quota will be challenged in the court. It is already in the Supreme Court. Then another important aspect is Articles 330 to 342 under Part 16 of the Constitution. They give special provisions for certain classes. Please don't forget, but here they identify only 4 classes: scheduled caste, scheduled tribes, backward classes and Anglo-Indians. Right friends, whatever is given in this slide, this is additional information to you and all the important aspects we discussed till this slide. Right friends, before leaving the reservations issue here, government gave the stipulations. This is also very important slide. Right. So as per the Ministry of Personnel, Public Grievances and Pensions, just have a glance at it. What are the stipulations given by the government? The persons should not be covered under the existing scheme of reservations for SCs, STs, OBCs. Then families' gross annual income should be below rupees 8 lakh. Another important aspect is persons whose family owns or possesses 5 acres of agricultural land and above, residential flat of 1000 square feet and above, residential plot of 100 square yards and above in municipalities, 200 square yards and above in other areas, they are exempted irrespective of the family income. Like that, there are number of other conditions given. Sometimes friends, these also may be important. Right friends, we deliberated for around 15 minutes on 10% quota. So you need not look at any editorial lecture. We have combined everything, and this much knowledge is essential because some critical question may be asked. On the first program, whatever we have discussed, that is Pradhan Mantri Shram Yogi Maandhan. This is about 10% quota. Let us look at another important aspect, that is Pradhan Mantri Kisan Samman Nidhi. Have a glance at it. This is the income support scheme to the small and marginal farmers, and rupees 6,000 will be paid directly into the beneficiary bank accounts. Right friends, 2-3 important points I would like to tell you. It is in fact applicable with retrospective effect. That means from 1st December. That means for the 4 months of this financial year, one installment of 2,000 rupees is going to be transferred, or you can say some of the families have already got it before 31st March. So friends, this is a central sector scheme, very important, administered by the Ministry of Agriculture. 100% contribution by the central sector scheme. The state's role is only to identify the families. Once the families are identified, directly it will be transferred into the bank accounts 3 times in a year. It is effective from 1st December 2018. Please don't forget. And through this, 12 crore families are going to be benefited. And the limit is the families which own cultivable land up to 2 hectares. Right? So friends, you can say this is not applicable for tenant farmers. Very important. Very important. PM Kisan, this is not applicable for tenant farmers. Second important aspect is it is not applicable for the agricultural laborers who don't own the land. So friends, whoever owns up to 2 hectares, those families will be benefited, and such families, there are around 12 crore marginal and small farmer families will be benefited. And please don't forget here, it is a central sector scheme and fully funded by the Government of India, and Ministry of Agriculture will transfer the benefit directly into the accounts of the beneficiaries. Right friends, have a glance at it. Because of this, 86% of the farmers are going to be benefited. Right? And farmers who own land up to 1 hectare are known as marginal, and 1 hectare to 2 hectares are known as small farmers. Please don't forget. Right friends, it is applicable for marginal and small farmers. Second is, it is a central sector scheme administered by the Ministry of Agriculture. Directly the amount will be transferred to the farmers' bank accounts. The role of the state government is, state government will identify the beneficiaries and it will feed the data in the portal, and it is not applicable for tenant farmers. It is not applicable for agricultural laborers who don't own the land. Right friends, I hope you got the point. And if you look at more on the agriculture related issues presented in the interim budget, 3-4 important aspects. And before going into the interim budget aspects, please don't forget one important development, that is the collateral free loans. Right, collateral free loans in the agriculture sector, they are increased from rupees 1 lakh to rupees 1.6 lakh. This is the important development, please don't forget. And another important aspect is 2% interest subvention to the farmers that will be available to the animal husbandry and fisheries also who avail the loans through the Kisan credit cards. Right friends, there is a 2% interest subvention to the farmers. Here it is announced also for the activities of animal husbandry as well as fisheries. That is another important development. All of you are familiar with the interest subvention scheme. Government gives a 2% interest subvention in the crop loans up to rupees 3 lakh. Right? And if they pay back in time, they will get another 3% interest subvention, and the same is made applicable to the fisheries sector and animal husbandry sector. And Rashtriya Kamdhenu Ayog was established. This is another important development, and this will look after effective implementation of welfare schemes for the cows. Very important. Separate department of fisheries. Right friends, these are the important aspects when one looks at agriculture. And friends, there are some measures taken in the budget to give boost to the housing sector. Right friends, I am clubbing these measures with the measures taken in the GST as far as housing sector is concerned. So I clubbed all these issues. First and the foremost is here TDS threshold for deduction of tax on rent increased from rupees 1,80,000 to rupees 2,40,000 per annum. So friends, this may not be that important, but what is important is this one, capital gains, this investment that is increased from 1 residential house to 2 residential houses. This is basically to give boost to the housing sector. What is capital gains? That means, let us take for example, last year you purchased the land for 1 crore rupees, and this year within 1 year you sold the land for 2 crore rupees. Right friends, last year you purchased the land for 1 crore. This year you sold the same land for 2 crore. That means you gained profit, huge profit. And over this you have to pay capital gains tax. And to avoid that, you can make investments to the benefit you got. That means you can invest so as to avoid capital gains tax. Previously, that investment was available for 1 residential house. Now, it's 2 houses. This is the important development. Then another important aspect is now the residents can occupy 2 houses. Right? This also may not be that important. Right friends? This is important. We are looking at GST. And please don't forget, the government is giving a boost to the housing sector, and in this context, we discussed about 3-4 important points, and I left 2-3 points here because they are not that important. But what is important is, what is the tax on the housing sector as far as GST is concerned? And friends, completed property, right? So here, if the sale takes place after the issuance of completion certificate, that means already completed, completion certificate issued. After that, the sale takes place, no GST. And normal houses, effective GST is 12%. And then affordable housing, effective GST is 8%. I am talking about prior to the changes. Prior to the changes, completed property, no GST if the completion certificate is issued. And for the normal houses, prior to the changes, I am talking about effective GST is 12%, though 18% is there, but 1/3 is taken as the land value. So therefore, effective GST comes to 12%. Similarly, for the affordable housing, it comes to 8%, right? This includes input tax credit. But what the government made now, changes to the GST. So as to give boost to the affordable housing, the changes made to the GST, now this is reduced to 5% without input tax credit. This is reduced to 1% without input tax credit. Friends, previously on the normal houses, GST was 12% with input tax credit. That means effective GST of 12% with input tax credit. Now it is reduced to 5% without input tax credit. And if you see affordable housing, previously it was 8% with input tax credit. Now it is reduced to 1% without input tax credit. I hope you got the points. So these are all the aspects, changes made. I already explained. And affordable housing, normal houses, what is the difference? Have a glance at it. Affordable house will be a house with the carpet area up to around 90 square meters and cost up to rupees 45 lakh in non-metro cities and other areas. And if it is metro city, or you can say these are the cities identified as metro, and here it is up to 60 square meters, but the cost is still 45 lakhs of rupees. Right friends, this is the classification of affordable housing, and these are the changes made to the GST on housing. Why I have taken is because government has taken steps to give boost to the housing sector. In that context, I explained these things. With regard to GST, other aspects, we will deliberate separately in the economy classes. Right friends, look at the next one, income tax. And here the most important aspect is the present practice is here. This is the present practice prior to the interim budget I am talking about. And in the interim budget, what is done is income tax slabs, that 2.5 lakhs, 2.5 to 5 lakhs, 5 to 10 lakhs, they were not changed. Very important. The slabs are not changed. Very, very important. Income tax slabs are not changed. But what is changed here is they are giving rebate of 12,500 for the persons whoever are earning rupees 5 lakhs a year. Right? This is the very, very important thing students should learn. That means if you are earning up to rupees 5 lakh, that means the income tax, if you calculate, it comes to rupees 12,500, and that is being given as rebate by the center. Right? Very, very important. So friends, the limits are not changed, or you can say the slabs are not changed. If your income crosses 2.5 lakh, you have to file income tax returns. Very, very important. Income tax slabs are not changed. Only the government has given rebate of rupees 12,500, or you can say rebate up to rupees 12,500 up to the persons whoever are earning up to rupees 5 lakh. Very, very important. Slabs are not changed. Government is giving only rebate. That is the important point one should not miss. That means here whoever are earning up to rupees 5 lakh, they need not pay single paise. Slab is not changed. You have to file income tax return, but you need not pay anything because government is giving the total rebate. But once your income crosses 5 lakh rupees, income tax is calculated just like normal procedure. 5% up to 5 lakh, 20% beyond 5 lakh, like that. So friends, government's rebate is applicable only up to rupees 5 lakh. Slabs are not changed. This is the important development. Then one more important aspect is standard deduction. Please don't forget, standard deduction is applicable only for the salaried class. That is increased from rupees 40,000 to rupees 50,000. And at the same time, next is this tax deducted at source on the interest earned on bank or post office deposits is increased to rupees 40,000 from rupees 10,000. Right? These are the issues, and we discussed number of important issues today, and primarily 5 issues we have deliberated. First one is Pradhan Mantri Shram Yogi Maandhan. The second important aspect, we deliberated 10% quota for the poor. Third important aspect is PM Kisan. Fourth important aspect is what are the government initiatives to give boost to the housing sector in recent times. Fifth important aspect is what are the changes made as far as income tax is concerned in the budget. I hope you got all these points, and with this let us conclude today's lecture. Have a nice day. Thank you.